Well, hello everyone. My name is Roger Scott. I'm the head trader for Wealth Press, and what do I always say? Let's get into it right now. Today is Tuesday, May 12th. We're looking at the E-mini S&Ps. Actually, we're looking at the futures. They're going to be opening up slightly. Let's just look really quick before we get into the top sector of the week so I could show you how the futures are looking. We're going to be opening up a little higher, but as you can see here, we're still below this mustard colored line, which is the 200-day moving average. The S&P is having a really hard time struggling to get above the 200-day moving average. Part of that reason is, and I'll show you why, is once again because of these top sectors. These are the top sectors: technology, healthcare, consumer discretionary. But if you look at materials, consumer staples, real estate, utilities, industrial, energy, and financial, they're lagging behind. As a matter of fact, one of the things that happens during this corona or any type of high volatility environment is you will see a fragmentation of sectors. The higher the volatility, the more fragmented the sectors will become. The less volatility, the more they will trade together. To give you an example, this is a 30-day view. Look at this. Energy sector up 18.77%. Utilities up 1.51%. We're all over the place. Have you ever seen the S&P that out of whack where one sector is up 18.77% and another sector is up 1.51%? This is what I was telling you. This is the time to be very sector specific. This is not a time where putting your money in the overall stock market is the way to go because there's too much stuff going on. We've got too much oil in the world. We don't have global economy working as normally because of coronavirus. We've got the whole world pretty much in a coma because of it. So there's a lot of things going on right now, and it's hard to figure out where the money is going. But there's a really simple way if you follow guidelines. Now, you go to stocks. This is Stock Fetcher. You could find this with millions of other software. I'm using Stock Fetcher because it's really simple. We go to stocks. Just click on stocks. You go to stock market sectors. All right. Now this is for today. This is the list of all the S&P sectors. This is every major sector in the S&P 500. But we can drill it down even further. We don't want to look at it for today or 5 days. We want to look at it for the last month. That'll give us a really good idea. So if we look at it over a month, you could see energy's been really bouncing over the last month, but I wouldn't put that in here because that's more of a short squeeze. But I like infotech and I like consumer discretionary. So let's click on information technology. If we click on information technology, we will see, let's take a look here at this chart here. Let's look at this graph. This is the infotech graph. And as you could see here, if we look at it, look at this thing. It looks just like the NASDAQ 100, right? Totally trading above. Let's go on a daily. Yeah, this is a daily. Good. Notice, looks almost identical to NASDAQ 100. Let me show you the NASDAQ 100. Look at that. That's the NASDAQ 100. And this is the infotech sector. They're literally almost looking identical. And that would be one of the main sectors that I would view right now. Now, what I would want to see is, instead of main view, I would want to go under performance. And that way, I can finally see the stocks that are leading or lagging. So, for example, alpha weight, let's say 52-week high change, all right? Look at this. Advanced Micro, 99%. NVIDIA, Fortinet, Apple, Citrix, KLA, Tencor, Microsoft. All the stocks that are leading, if we were to go here into the NASDAQ 100, let me show you this here. By strength, Tesla, NVIDIA, PayPal, AMD is right here. Netflix is right here. Citrix is right here. Notice, same stocks. Microsoft, Citrix, KLA, Apple, NVIDIA. They might be in a slightly different order because this isn't by 1 month, 3 month, and 6 month relative strength. This is just by 1 month. But to give, or 52 week, but to give you an idea, if you were to go by year-to-date change, you would probably Citrix, NVIDIA, PayPal, AMD, Microsoft, Adobe, Salesforce, all of them are there. So over the next several weeks, I like the infotech sector. The major issue that I have with it is on a 50-day basis, the sector's a little bit overbought, but because you could see here 88% of the stocks are trading above the 50-day moving average. But if you look at the 200-day moving average, which is the most instrumental or the most germane one to what we're looking at, it's not overbought. Only 53% of stocks are trading above the 200-day moving average. So there's plenty of upside to go. The only other sector that I like right now, and let's look at our 10 sectors. The only other sector that I'm really liking right now is healthcare. Consumer discretionary and tech, well, it's like the same sector. Apple, Amazon, Citrix System. Is it tech or is it consumer discretionary? It's kind of both. The more advanced tech gets, the more it becomes consumer discretionary because it becomes more usable. Does that make sense? Now, if you're talking about semiconductors or wire cables, okay, that's a whole different story. That's purely tech. But consumer discretionary has a lot of tech in it. But the only two sectors, or the only three sectors that I really like is consumer discretionary, healthcare, and technology. Now, if you were to look at these sectors over the last 30 days, you would see that consumer discretionary, technology, and healthcare are in second, third, and fourth place. The reason you're seeing energy in first place is not because energy is doing that great. The reason you're seeing energy, and I'll show you the reason why. Let me just go to energy. First of all, it's not anywhere near all-time highs. As you can see here, it's barely bounced back where the QQQ is, look at this, almost all the way back up. The energy sector is barely making headways. But the reason you're seeing this upside is mostly as a result of short covering, short squeeze. There were so many short positions going down here that traders decided to cover their shorts, and it created an upside rally. But I believe this rally is going to fizzle out because we can't even get close to the 200-day moving average. The broad market, the S&P 500, at least we bounced, but at least we made it all the way or almost to the 200-day moving average. But the energy sector, not even close, as you could see right here. So the bottom line is I am really focused, and I'll show you again, stock market sectors. Let's go 1 month, and you could see here information technology is definitely the place to be. And if you're looking at components, again, you would just go to performance, and you can look at it by year by date. You could look at it by 1 month change. 3 month change would probably be if I had to choose one of these, I would go by 3 month change or 52-week change. But the bottom line is, if you look at this, Citrix, PayPal, Nvidia, look at these stocks here in the NASDAQ that are leading. Tesla, Nvidia, PayPal, Netflix, same stocks. The bottom line is there's more than one way to skin a cat, and that's what we're doing today. And you want to make sure that you're in sectors that are leading, not lagging. Now, if you want to find sectors that are lagging for shorts, we could do that as well. That would be really easy. We would just go back here to sectors, to tools. Actually, sorry, go to sectors, go to stock market sectors, and you would go again to 30 days. And you could see here utilities is the worst one. So if you're looking to short, I would be looking to short industrial, financial, real estate, or utilities. And if you look at my top 10 sectors, financial, energy, industrial, and utilities. We're using two different programs, two different algorithms, and we're coming to the same conclusion both ways. And that's a really good thing, where you can do two different ways of analyzing something and back into it. When you can do that, either technical analysis and fundamental or two different softwares, the bottom line is if you can start off at two different angles and come to the same conclusion, that's very powerful. Now, listen up. I've got something big for you. You could be incredibly close to earning $12,500 off of one trade. That's right. I read it right. One trade. America's top day trader, Lance Ippolito, he recently issued an alert that seemed to defy all logic. Investors they were stumped when the trade netted 1,250% return. Tomorrow is Wednesday at 2 p.m. Eastern Time. Lance is going to show you exactly how he's able to make thousands off the market with the strangest technique I've ever seen. And folks, sometimes strange techniques work very well. When traders started using waves and technical analysis, other traders were calling it strange techniques, okay? So you've got to see this. Follow the link, click the link below, or follow the button at the end of this video. You got to check it out. Lance Ippolito is a one-of-a-kind guy. He is literally a one-of-a-kind trader. I love Lance. He's one of my favorite guys. And he's an incredible human being too. But that's besides the point. Follow the link below. Check out this strategy. Click the link at the bottom of this video. You've got to check out Lance Ippolito. $12,500 or 1,250% return on one trade. He's going to talk all about it. Tomorrow, 2 p.m. Eastern Time, Wednesday. You cannot afford to miss this. I'll talk to you guys soon. Take care and have a great day.